It's been a heavy few weeks, personally and in the markets. My prayers go out to everyone affected by what's happening in the world right now. But I'm back, and there's a lot of data to go through, so let's get into it. There were 9 trades total between week 2 and week 3. The checklist compliance for week 1 was 57.5%. Week 2 improved to around 72%, and week 3 increased slightly to around 75%. So my checklist compliance was increasing week over week, but I still ended up in the red for both weeks. The most important finding, 8 out of 9 trades were valid setups based on my rules. The analysis was right, the entries were mostly confirmed, and the system was working. The problem was what happened after I entered the trade. 6 out of 9 trades had winners cut short or targets mismanaged. Those 6 trades could have made over $2,000 in profit, but instead I ended up in the red and blew the challenge. Not from bad setups, not from wrong analysis, all from not letting valid trades run. Let's take a look. Starting with week 2 trades, Monday had a solid setup. We had a sweep of the weekly low, daily bullish SMT with lower time frame confirmation. So the setup was valid. During the trade, the overnight high was swept, followed by bearish momentum. And so I closed it out early out of fear that price would reverse. That last trade would have made back my losses if I had let it run to the highs above. My loss came from reacting to short-term price action instead of staying in line with the higher time frame narrative. So overall, I'd give this trade a 60% because of the emotional entry and early close. Moving on to Tuesday's trade, we had a sweep of the pre-market high, 15-minute bearish SMT, and 1-minute confirmation at the inversion fair value gap. So the setup was valid. If I had just left the trade alone, it would have closed at $343 profit. But instead, I overmanaged it and turned it into a $350 loss. That's about $693 lost from one bad decision. The setup was right, I just didn't leave it alone. So overall, I give this trade an 80%. The setup was strong, but overmanaging turned this trade that should have been a winner into a loser. Moving on to Wednesday's trade, we had a sweep of the 830 low with bullish SMTs. I saw the first valid entry form, which was at the 1 minute. See, after the 1 minute break of structure, but I hesitated and didn't enter. If I had taken it, that would have been a great entry with very little drawdown. Since I missed it, I entered later at the first presented for value gap instead, but this was lower probability since it was higher up the leg. Then I moved my stop loss to above break even to the 1 minute low, got stopped out, and was locked out before the move into the previous day high above. If I had kept the stop at break even, that trade would have won. I hesitated on the entry and was too aggressive with moving my stop loss, and both cost me. So overall, I give this trade an 80%. I did not enter the trade immediately as soon as my rules were met. Thursday was the cleanest setup from week 2. We had a sweep at the pre-market high, 15-minute bearish SMT at the 1-hour inversion fair value gap, at a lower time frame confirmation. My targets were the 930 and pre-market lows below. I entered the trade and stepped away to take a phone call and came back, saw a 1-minute bullish SMT, and emotionally closed the trade. I took a loss of about $78 before price went and hit my target. If I had just let this trade run, it could have made about $1,500, but instead I took that unnecessary loss because of the emotional close. So overall, I give this trade an 80%. The setup was there, it was valid, but that post-entry emotional close of the trade definitely takes some points off. Friday is where the setup didn't meet my rules. There was no higher time frame sweep, but there was bearish SMT on the 15-minute chart, so I took the trade anyway. However, price was showing clear reasons to be bullish. There was a sweep of the higher time frame lows, bullish SMT, and price was below the midnight and 7:30 opens, which is where traders usually like to go long. This was a setup that fit my rules perfectly, but I was bearish because of the higher time frame trend and talked myself into the short. This is the second Friday in a row where this happened. Friday's trade from week 1 was the same. All narrative, no sweep, full loss. Grade for this trade is a 60%. I was too glued to my narrative and there was no higher time frame sweep. A stronger trade would have been the bullish setup because that actually fit all of my rules. The overall checklist compliance for week 2 was about 72%, which was my goal coming out of week 1. But I still lost about $1,075 in week 2. Compliance went up, but results got worse. So I'm following my rules up until the entry. The problem is what happens after I'm in the trade. And we see that more clearly in week 3. Starting with Monday's trade from week 3, we had a valid setup, we had a sweep at the pre-market high, 15-minute bearish SMT, and lower time frame confirmation. However, I entered at the 1-minute order block within the 15-minute inversion fair value gap, which was a lower probability because this was at discount of the 1-minute range. Instead, I should have waited for price to return to the first presented fair value gap at OTE. But in general, I was offside. There were definitely reasons for bullishness that day. The weekly projections suggested that the higher time frame range may not have fully played out yet, especially because it was only Monday. However, it did fit my rules, so I was willing to take the short. So this trade gets a 60%. The entry was not great, and it was lower probability. POIs at OTE should be prioritized. Moving on to Tuesday, this was a different kind of frustrating. It was a valid setup, we had a sweep at the pre-market high, 15-minute bearish SMT, and lower time frame confirmation. I set my target between the 1-minute low and the midnight open. The price touched my target, but did not fill my order. Then it reversed and stopped me out for a loss of $78. After getting stopped out, I re-entered, thinking that price can now reverse after stopping out traders who had short like me. But I ended up taking another loss. I was down about 153 on the day. If I had set my trade to a fixed risk to reward, this trade would have won. Overall, this trade gets an 80%, maybe even a 90%. The target was a bit ambitious, and then I took that second trade, which I could say was a bit emotional after seeing that first trade play out. Wednesday had 2 trades. The first one, I was stopped out when price came back for the midnight open above, which was reasonable. The second trade was higher probability. We had a sweep of the H high, 15-minute bearish SMT, as well as midnight SMT with ES and lower time frame confirmation, but I closed it prematurely. It was the same pattern as Tuesday from week 2. It was a valid trade. Entry was confirmed, but I closed it out before it could finish. If I had just left it alone, it would have hit my target. This trade gets an 80% because of that premature exit on the second trade. So I don't have the recording for Friday's trade, but here are my notes and thought process. We had a valid setup. The pre-market highs were swept. 15-minute bearish SMT with lower time frame confirmation. My POI was the 15-minute inversion fair value gap. However, I overmanaged the trade and closed at a loss. Just placing it and letting it run at a fixed 1 to 3 risk to reward would have won, but because I interfered and closed out early, I ended up at a loss and the account was blown. This trade gets an 80% because of the overmanagement. Taking both weeks, this is what they show together. 9 trades total, 8 of those were valid setups, but none of them were executed correctly. 6 of those 9 trades had winners cut short or took unnecessary losses. With proper exits and management, if I had left a lot of these trades alone, they could have generated over $2,000 in profit. Taking just Tuesday and Thursday of week 2 alone, Tuesday could have won $343 and Thursday could have won $1,500 if I hadn't touched them. Those 2 trades cost me about $1,800 in missed profit alone. Compliance improved week over week, the analysis was right most of the time, and the system was working up until entry. The main thing that kept showing up was that I'm not letting valid trades finish. The problem isn't reading the market or the checklist. It's what happens when I'm inside the trade. Every time I interfered, it resulted in cut profits or unnecessary losses. So I've reset the challenge and I'm going to make 2 changes moving forward based on what the data has shown me. First, I'm gonna have fixed risk to reward targets only. Both weeks showed multiple trades where a fixed risk to reward would have won. Every trade will be set at a fixed 1 to 2.5 or 1 to 3 risk to reward moving forward. Another option is setting partials. So let's say I sell 3 contracts on MNQ. So setting my target for 2 of those contracts at 1 to 2 risk to reward and then letting the last contract run to 3 risk to reward. I'm not 100% sure yet if I'm going to do it, but definitely will set the final target based on a fixed risk to reward. The second and probably biggest change is walking away after the entry. Once my stop loss is placed and my targets are set, I leave my desk and go for a walk. The data shows that my presence during the trade is the problem, not the market. So I'll be stepping away and letting my trades run and my system work. From these 9 trades in weeks 2 and 3, we see that the pattern is clear and so is the fix. I need to get out of my own way and let my system do the work. The count has been reset and phase 2 continues with these 2 changes in place. If you enjoyed this video, like, comment, and subscribe to follow the journey, and I'll see you in the next one.